Mortgage rates in Canada in 2022 are skyrocketing. What are mortgage rate predictions in Canada? When are the Bank of Canada's interest rate announcement dates for 2022? And how is that going to impact your mortgage payments? And what are the tips and strategies when exploring your mortgage options? What's up guys, my name is Felix Chan, Calgary real estate agent and mortgage broker with the LiveInnerCity real estate team. And by the end of this video, you're gonna have the tools to predict where the Canadian mortgage rates are going, the important things to know when deciding between a fixed or a variable rate mortgage, and I'm gonna have some tips for you and strategies at the end. So let's get right into it. Let's talk about the mortgage rate predictions in Canada. To give you some context, there are rates for the fixed rate mortgage and rates for the variable rate mortgage. When you hear about rates going up in the Canadian news, it's mostly about the Bank of Canada's overnight rate, resulting in changes in prime. This affects variable rate mortgages and home equity lines of credits, or what we call HELOCs, not fixed rate mortgages. More of that in a second. Variable rates tend to be prime minus a certain rate. So as an example, it would be prime minus 0.5% or prime minus 1%. This isn't always the case though, because it could always be prime plus. But right now, we are still in the prime minus environment. Let me pull up a chart of the Bank of Canada overnight rate and prime rate from 1948 to 2022. Thanks to Wikipedia. As you can see, up until the late 60s, both rates were under 6% and went as high as 20+% in the 80s. Since then, we've enjoyed lower trending interest rates and they have never been this low. At the time of making this video, prime is currently sitting at 3.7%, well, with most chartered banks. This mortgage rate prediction is a little bit tougher without having updated charts, but you don't need to do much work to predict mortgage rates because, well, economists do it for us. They are calling for a 0.5% increase at the next Bank of Canada interest rate announcement date on July 13th to 4.2%, and another increase to about 4.45 to 4.7% on September 7th, 2022. Fixed mortgage rates. Believe it or not, you can actually somewhat predict where fixed rates are going. Fixed mortgage rates are correlated with the Government of Canada bond yields. Now I'm gonna pull up this chart of the 5-year bond yields because most people get the 5-year fixed. And if you want a 3-year fixed, then look at the 3-year bond yields. If I max out this chart, it goes back to 1995. You can see that it hit rock bottom in 2020, and we are back at levels not seen since 2008. If I zoom out to the 5-year chart, you can see that rates started climbing in late 2020 and have been on an absolute tear in 2022. If you want to predict where fixed mortgage rates are going, this chart will be your friend. Now that we've gone over how to best predict where mortgage rates in Canada are going, let's talk about what if the Bank of Canada in fact hikes prime rate up 50 points. Now, if you had a $500,000 variable rate mortgage and let's say your net rate is 3.25%, your mortgage payment would be $2,430. If the rate went up 50 points to 3.75%, your mortgage payments would then be $2,565, a difference of $135. Now, that doesn't sound too bad. However, the prime rate has already been moving up this year and is predicted to keep on moving until fall. I'll have some tips and strategies for you at the end of the video, which is coming up next. But if you were thinking about a variable rate mortgage, I want to give you an interesting fact now. Over the last 30 years, variable rate mortgages have saved more interest costs compared to the interest costs of a 5-year fixed rate mortgage. If you are looking at RBC, TD, or Scotiabank mortgage rates, one of those lenders on July 15th increased a handful of their fixed rates by 45 points. That is huge. Now, I'm not gonna talk about, the best variable mortgage rates in Canada, but with the big 6 banks, they're normally quite similar. but you may be able to arbitrage some of these rates in these crazy times. If you want a deeper dive into choosing a fixed or variable rate mortgage, check out my video here. And if you have found this video valuable so far, we would love your support by liking the video, and feel free to subscribe if you want more content like this. And hit the notification bell so you know when our next video comes out. Tips and strategies for choosing a mortgage. I'm going to break this down into variable and fixed rate mortgages. Variable rate mortgages. Okay, so I mentioned earlier that in the last few decades, variable rate mortgages saved more interest than fixed rate mortgages. Here's a juicy secret that you may not have known about. Another advantage of variable rate mortgages is the stress test qualifying guidelines. It actually allows you to qualify for a bigger mortgage compared to a fixed rate. You are more than welcome to reach out to our team to see if this strategy is a good fit for you. Other tips for variable rate mortgages. You can actually convert your variable rate mortgage to a fixed rate mortgage anytime. If you are thinking about getting the variable, my mortgage team always gives you what your mortgage payments would be if prime rate increases, say by 0.5% or 1%. That way, you'll know if you have the budget for increasing payments or if you will lose sleep at night. So there isn't just a financial factor, there's also an emotional factor to consider. We all want to live a happy life, and being stressed out, well, it doesn't really feed into that. There's no point in predicting where interest rates are going because, well, you don't have control of interest rates. However, what you can control is how much you pay per month. Note that most lenders will change their monthly payments when prime changes. However, some lenders like TD will keep your payment the same, but they just adjust the ratio of what goes towards principal and interest. Fixed rate mortgages. Although fixed rates with major lenders are pushing around 5%, which now seems pretty high, I want to remind you that in the 80s, they were double digits. About 2 years ago, fixed rates were under 2%. And in this short time, they have climbed to 4.5% to 5%. Fixed rate mortgages are great for first-time home buyers and for those who doesn't have the stomach for the risk of higher payments. You will typically pay more in interest costs. However, that's the price you pay for having that security. Protecting yourself from rising interest mortgage rates. It's very simple, guys. Make sure you get a pre-approval done. If you have been thinking about buying or you think you're almost ready, don't wait until you actually are because it's costing you every single day. A pre-approval locks in your rate for up to 120 days and it acts as an insurance policy, protecting you from rising rates. And if rates fall, which is unlikely, then you're gonna get the benefit of the lower rate. If your pre-approval expires and you haven't bought anything, not a problem. We just would reset that rate at then time. You can reach out to my mortgage team to help you out with this. We are nearly Canada-wide, so you can be in BC, Alberta, or Ontario, and we can still help you. If not, then use someone else. It doesn't matter. The point is get pre-approved today. Each day you wait, it is more interest you pay, so be proactive. And that's it, guys. Hopefully this has helped you. And if it did, please support our channel by smashing that like button and subscribe for more content like this. I'm going to have some videos pop up on the screen here and here if you want to learn more about Calgary real estate. So feel free to click it after this video. My name is Felix Chan, Calgary realtor and mortgage broker with the LiveInnerCity real estate team, helping you keep real estate simple, and we will see you in a few seconds.